Good afternoon, everybody, and welcome back to another live StockTwits Q&A session. Before we start answering your questions, we're just going to show you a quick video. It's going to give you a glimpse into Scott's trading world. Check this out.
I'm in a little MGM and I'm still in OIH. I bought it this morning at 107.50.
Apple's good.
You don't buy in the first 5 minutes of the day.
I live in Jersey City. I was born in Long Island, went to school at SUNY Albany. As a firm, we are 5 partners and I'm one of them. I am the strategist that puts the game plan together for about 400 traders. I kind of command that army. What's going to make us money with that is on a day like today, if it's up or down 3 handles, that's when you see where other money is really getting put to work, and that's where the action is. You held 1,600 the whole time?
I got 1,000.
See, that's a growing experience for you, brother. All of the traders trade our money, so they have to be right. They have to say, okay, I think Apple's going from 260 to 265, and if they're right, they make money. It's a good setup. Stick with the win.
Okay.
It's the right trade. Don't watch it so close. Relax.
Scott's coming on in a minute, so we're going to listen to Scott.
Scott, technicals first. Market looks good. Volume seems a little light. What do you see?
Right now, the market's behaving very well technically.
Let's talk to this guy. Now, here's a guy, Scott Redler, who does nothing but technical analysis, but puts his money where his mouth is because he's got a firm and his partners put their money in every day and trade on technical analysis.
I'm not looking for a home run. It's not a get-rich-quick scheme. If I'm able to pick the direction of the market, I could book a winning trade and I could provide for my family.
Where's the breakout? That is the next evolution.
Welcome back, and we're ready to answer your questions live. I'm here with Scott Red Dog Redler. You ready, Scott, to answer some questions?
I'm ready. I'm just not sure where I want to look yet. I think I'm going to look right there. Okay. First of all, you just saw a little glimpse into the day in the life, which shows little pieces of what goes on from 4:45 in the morning to late at night to sometimes on the weekends, and a little bit of the lifestyle of a trader. We try and be balanced. We try and do what we can to keep ourselves even keel, to make sure that we can make those trading decisions throughout the course of a day to make sure we can stick to our game plan. So with that said, I see a lot of questions, so we're going to just take it away right now, Brittany, and let's just roll it in.
Let's roll with it. We have one right here from ARK saying, has the market reached its peak? Should I sell tomorrow?
I think I've been asked that question, maybe once or twice throughout 2013. So, with that said, we talk about time frames, and we talk about what time frame do you trade if you're an active trader, an intermediate trend follower, or a macro investor. So, with that said, I'm going to talk about the intermediate time frame right now because we've been, pretty much going back and forth and developing this wedge/pivot level that we've done twice already. So, with that said, you've seen me post these charts on Twitter. We've talked about it, not knowing which way we'll resolve because we really haven't had a substantial correction in 2013. We've had 2 minor pullbacks and we've just continued. So if you look at the chart here of the SPX, you will see I've gone over this chart numerous times, and one of them was obviously this was what started the year. This was your pretty much 2-day igniting bar that ignited 2013. Then one pivot that we eclipsed was right here. Remember this 1474. From here in my portfolio approach, I think I was long 13 to 15 positions, and we continued to trend higher. Then what happened? We had our first little shakeup, right? This was a shakeup right there. You had, pretty much engulfing bar, closed below the 8-day the first time. Then we bounced back, and then look at the size of this bar. So right there, I think some guys took risk off, and that's important. From an intermediate standpoint, you don't know, from 1530, from where we started, maybe that was it. And what happened was we reversed here, held higher, and then we went again. Took out 1530, continued. Then the next pivot point we were looking at was right here. What would happen when we took out 1576? What happened was we hit 1597 and then failed. So right around here, if you put positions back on an intermediate basis and you trailed them this entire way, and then on this wide range bar when you had this small breakout failure and you went back to cash or a little risk off, you then had to see what happened. So what happened here? Boom, we held the 50-day. From there, bounced up, saw that we actually took out this small little, descending channel again and then held above it. So this was your spot to get back in multiple positions. And then after holding higher, we ignited once again through 1597, and then we had another trending move above the 8-day all the way to last Wednesday. Then what happened last Wednesday? You had your outside day. You had your reason to potentially clean up loose positions again, like you had here and like you had there. Okay, and some people got even net short, and then you had that day and a half move down into the 21-day, okay, which was about a 3.3% correction from the highs down to the lows. And then we opened down again, remember last Friday, and we basically absorbed both days. Then here you gapped up, sold down. Here we went lower, came off it, and then here kind of back in the middle. So what we have now is this upper wedge type pattern. So what we know is this. We know that this is key support, the 21-day moving average. You know that this 1635 to 1640 is what you could be trading against. Then you know that this is your pretty much descending trend line again, like you had here and like you had here. So I think we need more time, and there's definitely, there's no reason to be all in or all out, and I think a lot of guys are making some money long some of the banks and long in some spots and short some spots to be short. So until that is, until this resolves, I wouldn't worry about a real macro move, but I have a little risk off, and I think that, a little bit more tactical trading in this area, both long and short, is probably makes sense. And if you're a macro investor putting monthly funds into an S&P fund or whatever it is you're doing, do I think the higher the year is in, if we do pull back and go below 1640, I do not think so. So with that said, stick to your plan, and there's still a lot of good action out there.
Exactly, yeah. Let's take it on a case-by-case basis then and answer some of these more stock-related questions. We have one about Facebook. Here's one from Trader RL saying, what are your thoughts on Facebook? Could this be the start of a move higher?
It's funny because yesterday, people were like beating me up about Facebook. They're like, oh, you look at Facebook getting crushed, da-da-da-da. Wasn't that in the 2013 thesis? And I said, I'm like, you know what? Out of 8 scenarios, one of them happens to be not working out, but if you admit to it and you say, okay, you know what, the technical has changed, you could change your opinion and because the market didn't confirm it and save yourself a lot of money versus just getting stubborn. And if you look what happened last quarter, last earnings was right here, okay? It looked like it was getting better, right? It looked like it was gonna break out above this descending channel on earnings. What happened? 2 red bars negated that earnings move right there. That was a sell signal. Or right here was a sell signal. From there, probably haven't really looked at it again, okay? Because, it just wasn't worthy of it. So then yesterday you closed in the dead lows, okay? Some people tried to buy it yesterday, whatever. And then today it got upgraded. Got upgraded by 2 different firms. At this point, you know what? If you want to say, can this build? I guess maybe. What you're going to have to do, though, it has a lot to prove. Right here is the low. Let it go sideways for a little bit, and then maybe if it were to cross above today's high in the next few sessions, you get another move. But there's going to be a lot of resistance coming into these moving averages. So I think that it's oversold enough to try and get a bounce to here, but it's still broken and has a lot to prove because, again, there's news about, some of their advertisers leaving. There's news about, them not getting traction on mobile, that the user experience because of the noise. So with all that said, with this stock, okay, it was always a little fundamentally flawed. And new issues are usually always fundamentally flawed because the investment bankers are a bunch of piggies and they start it up wherever they need to get their clients paid, but whatever. So with that, what happens is sometimes the supply and demand and the technicals, control a stock until the fundamentals maybe catch up, which you see with stocks with very high PEs. But what happened here is every time this looked decent technically and then the fundamentals didn't back it up, you had to evaluate whether or not the technicals changed. And again, you go back to this chart, technicals changed a few times. This was one of them, okay? And then also, if you remember way back here, this was another one, okay? Remember in the beginning, no one really knew what was going on here because someone was beating up about this call. It looked like it was trying to be a cup and handle right here. So what does technicals tell you? It says, okay, looks decent, be long potentially verse 30.50, because if it were to break above this, you didn't know back then what would happen, but if you have your out and it's calculated, that's your out. Look what happened then, boom, boom, boom. Broke below it. That's how you save yourself money by using technicals when the fundamentals don't match up yet.
Let's answer this one about Apple. We have one from Stone Street Trader saying, you've talked about your call spread on Apple. Do you have a target for that trade where you'll peel it off?
I guess it depends when it happens. So what I did yesterday is I bought the 450s, and I sold the 455s, which I think my net cost was 2, but all I could make is 3, because if your net cost is 2, you need to go from 450 to 455 in order, to get it fulfilled. And if it happens before, you have to worry about, the time value of the ones you sold and all this kind of stuff. So, whatever. And then I bought the 450s and I sold the 460s, which I think my net cost was like less than 4. And if it goes to 460 and I hold it there, and then the 460s, if it gets all whatever adjusted, okay, then I can make maybe 6.5 on that. So with that said, we'll see what happens. If like midweek it gets to 460 and I want to take the call spreads off next week and then roll them out to another price point, because 460, 465 is another level, maybe I'll do it, and I won't make exactly what you can make, because you have to work out where the premiums are and whatnot, and the time value. So with that said, you look at the chart. Let's just go over this real quickly. Stock to me is acting better and looking better. We know the battering and the battered and bruised nature of this situation, all the way from 700. We know that every time it tried to bounce, it didn't, and gave you a lot of reasons to get out of the way. This was that head and shoulders top right there. That's when it broke. Remember the 21-day moving average, which it didn't break from July, and that was pretty much your sell signal. And here's your 50-day that failed. Here, just all in all, it's been failing a lot. Here was your red dog reversal that bounced, gave you a nice little move, and then boom. Here was to start 2013, ignited, couldn't hold the gap, and failed. So all in all, Apple still has a ton to prove. Okay, and let's hope that the second half of the year will be a lot better than the first, which I think it could be. So all in all, this is when, remember this 420 after earnings, they announced a huge buyback, and the dividend gave us a nice trade back to the resistance of around 465, and then it failed right here. This is what got me out of the trade there, and then it held 420, and now I'm in the stock, I'm in the options, and today you could say that it broke above a nice level here, this 450, 451, and sold off a little bit at the end of the day with the market, but it could be also for, tomorrow's option guys. But I would say, it's looking better. It's building this right shoulder. If they do have something that's blockbuster June 10th, or if they come out with some kind of wearable device or something, somewhat better than they've been saying, I do still think that at some point, we could see the 200-day, which is close to 500. Do I think it can get back to 700? Probably not. But at this point, as a trader that, can maneuver in and out, I think that this is, the area that I'm looking for Apple to maneuver to, and we'll just try and navigate the roadmap.
That was actually going to be my next question. If you thought we'd see it get back to 700, if we start seeing wearable computers and fantastic revolutionary products.
At this point, Apple always was glass half full. Now I feel like for the past few months it's been glass half empty. So if they do come out with something and it's innovating and everyone wants it, which I think they could. I think, who knows, it could change. Maybe they'll be seen as innovative and the growth will be back. But right now, the sales have started declining, their earnings are declining, but they have a lot of cash, their PE is low. But again, it's more of like a supply and demand issue with the stock where, at 451.5, is it overowned here? Do people want to execute and get in here at this level under this composure of the stock? Maybe not, but if all of a sudden, wearable watch and a few other things and the TV, who knows? Maybe you get that catalyst and then it'll start a new trend, and then it'll be back to glass half full versus half empty, which it's been for quite some time now.
Right, yeah, just have to wait for that concrete product, right?
Yes.
All right, well, how about we talk some 3D printing stocks?
Let's do it.
We have one from Leroy Trader saying, what are your thoughts in today's wedge breakout in 3D systems? Do you think Stratasys will play catch up?
Well, both of these stocks have been highlighted by Chartco many times, and I think she had it in there yesterday, as a potential breakout of this wedge. And, even with that sell-off that you saw at the end of the day, you look at the chart, it really didn't, okay? So it was nice and clean. I know that, she's listed it many times. One of the more macro times was right around here. Remember this descending channel right there, and then it broke above this. And since then, it's been a really nice leader. So with that said, it consolidated after breaking above highs, close near the highs. This is your all-time high. I still think that this stock, has a lot of room left, has a lot of years of innovation, and it's one of those cutting-edge technologies. So it closed strong. So at this point, As long as it stays above this area, you can stay with it short term. If it were to open down a little bit and trade through today's high tomorrow, it could continue. That's your point of reference. Your question was, what about SSYS? It didn't seem to have the power as Triple D today, but who knows why? This is still somewhat wedging. It seemed like this one moves with it, but again, the flows are different at some points. And you look here, I would say this starts getting above 90. You add to it, and then all of a sudden, there's no reason why this thing can't see all-time highs in 100 plus. And let's just talk about the last one, because they are a group. This has been, just so you know, like I talk about new issues and I talk about potential and being a stock picker and more than a trade. And this one was, remember the art of the first day, actually gave you a nice move. And then we've talked about this many times. This was one of the wedges, broke higher. And then, it took out, this was a little choppy right around here, but all in all, if you read about this, it was an IBD a few times about in the New America section. Look where it is now at 49. So this shows you that the market can work for you. All the people who were involved in the deal got paid, with the new issue, the secondary, whatever. And then anyone who, with a plan bought maybe around 28 or bought around 34, you're making money as well. And, it's a young, innovative company. It's only been around 4 months. So, it's something to, when these things come out, you do your homework, because just like last year, I came out with my 3 amigos. It was like, I think it was Dunkin' Donuts, it was Coors, and it was LinkedIn, all stocks that had the potential to be more than a trade. And each one of them, did pretty well, and you just had to navigate it on your time frame.
All right.
Not to I'm just saying it can be done.
Pat yourself on the back.
Yeah,
but
it can be done. Like if the ingredients are there, you look at it and you figure out whether or not it's in your risk profile.
Gotcha. How about some solar? Let's talk SolarCity. Bam, here goes SolarCity. Like watching paint dry today. Thoughts on possible upward action tomorrow?
You know what? I'll say that. Who was that?
Bam.
Bam, you're a little spoiled. Like, not every day you're going to get crazy, crazy moves. And this group was upgraded today by Goldman, so there was better action in other places. So I guess you're going to go to the chart before I stop speaking. Here is this chart. Last time you had a nice clean breakout was above this 39, gave you a nice 2-bar move, and then corrected to the 8-day. And sometimes you see, as these go higher, they need some platforms to spring off of. So as of right now, I would say it's still above the 8-day. Don't like the fact that the group was pretty hot today and it didn't really get much follow through. But again, I just think you need some time. If you're playing it because you like the company, you like the CEO, you like everything that you like Musk, everything that he's doing here, then just stay the course. If you're playing for momentum, you're going to have to wait till it gets above 52.50, kind of like what it did here, with some type of force. I don't know if it's going to be tomorrow, but this is something that a lot of active traders are watching. Very small float. Seems like there's big money behind it. So, if it continues to follow the 8-day like it's been doing since early May, stay with it, because that means the composure is still there. But if it were to get above here, then maybe you get your exciting move. So at this particular point, I'd be a little bit careful, because it's a little bit frothy, but shorts are losing and it's trading with tradable patterns. So continue to watch those patterns.
How about follow up to that group, SunPower, SPWR. Gibbs here says it broke out of its small wedge-like pattern over the past 6 days. Could this mean it has some upside, or is a new sideways trend starting?
Well, a lot of these things have just come so far so fast. And I remember Taylor and Chartco, they had this on the off the charts also when it was like constricting, when FSLR had a really nice pattern, and that was the leadership stock. And then you look at what happened here, this was one breakout. And then you had a nice flag right here. This was another breakout. And then it got very juicy, so to speak, or the sun was shining on it. And then here was your outside day. This was an outside day where told you to take some off the table after a massive run. Then you had some follow through to the downside. And now it's just trying to regroup. I think today with the upgrade, it wasn't a gap and go with craziness, but it's going to take time. I don't think you could expect this type of move, so many different times. As it gets higher, the ranges expand. If you remember FSLR.
We actually have a question on FSLR.
All right, so
Trader RLL was just asking for your thoughts on the stock. He says it looks like it could test the 59 level.
Okay, let's take a look. This one was something that was good to watch because it ignited the entire group, so to speak. Remember that day when it ignited and went up? I don't remember what they announced. I think they came out with earnings that nobody was expecting. And then while the market corrected in early April, this thing held in there. And then boom, once it cleared this flag pattern, this was a nice trade. And then it got a little just say choppy again, and this was earnings, okay? But then because these things are concept plays and they don't really care about it, I guess that much, it went again, and now it's a tough now. It's tough that from 30 and from where it was left for dead all the way up to here. What I would do short term is it gapped up on Goldman's upgrade. Yesterday it was one of the first ones to go positive, so if you tried to buy it into support, you got paid handsomely, not knowing. So sometimes technically you could see what goes on, and obviously not know that there's an upgrade coming, which is what happened right here. Same type of thing happened into this area. So anyway, gapped up, and now I would say watch this gap. The longer it stays, hold on, let me get my pencil off of here. The longer it stays above 54.41 and goes sideways, the higher the probability it takes out today's high and then sees the old high. But overall, I think it's going to need time. This group has been very nice and very, it's very talked about as being, the shorted sector that everyone's saying the fundamentals don't match, blah, blah, blah. But, at this point, they've been trading very well, and better to trade them without opinions than opinions, so to speak.
All right. Well, you mentioned Elon Musk before.
Musk.
So how about we talk Tesla? We have one from RL here saying, what are your thoughts on Tesla? Range seems to be developing between 100 and 115.
All right, well, you just answered your own question. Who's that?
Trader RL.
Trader RL.
Yeah, he sent us a lot of questions today.
Okay, cool. Well, this stock has been a trader's new go-to scenario. It's been rewarding technically on a lot of different levels. Sometimes long, sometimes short. Obviously, after a move from the 30s, the real money has been made from the long side. But as it's increased, the range is increased, and the volatility increased, and you could use a 3-minute, a 5-minute, a 15-minute chart, and all in all, it does move when it triggers. So with that said, you look at the chart here, you will see, this was the last big move. Remember earnings? It went up on the 4th day, gave us that red dog reversal. That's when I think I got quoted in the journal saying I got short around 95. And then this was when it went back below 88, and I said it can go into the 70s. It didn't go to the mid-70s, but it went to as low as 78.11, and then held the 8th day, constricted, and then last week when we had that outside day, and then Thursday was weak, it woke up. So I think we talked about this in Off the Charts. This was a nice long here, and then once it cleared this prior pivot, gave you another squeeze and follow through, and then look at what a Quinky did on the 4th day, another red dog reversal. Okay, wound up holding into the gap 99, and then today was an inside day. There's a lot of talk about it. I think Kramer's going to be test driving one tomorrow. All in all, probably needs a few days. Look how many days it took here. It took 1, 2, 3, 4, 5 days before it started to show its stripes that it wanted to continue to the upside. So I would say the longer it stays above the 8th day and goes sideways, the higher the probability that if it does take out this area, this 110 to 114, you could see another move. This is the type of stock that has the ingredients to keep going. It's a new innovative technology. They're going to be rolling out cheaper cars. They're going to be rolling out better battery stations. There's a thin float. You have, the CEO who's fully seems like a stock guy, and he's almost like the Tony Stark of the new wave.
Yeah. And it's a hit with consumers too. That stat about 25% of the people who test drive it buy one.
Right. So you have a lot of stuff here. So with that said, 22 million shares or more are short. Keep trading it technically. The technicals will tell us whether it needs a bigger rest, or it'll tell us how it's holding higher and it can continue, because there are some people who say it can go to 300, and there's some people who are saying it's going back to 50. So let the stock action tell you, but know your time frame. For me, I've been trying to do it from a 1 to 3 day time period, and it's been working. And then intraday, there's definitely some smaller moves for those who don't take risk overnight and learn how to trade it, because it does move. It could pay you based on patterns.
Okay, keep the questions coming, guys. We're going to take a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet, at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
Well, if you watched this morning's morning call, we talked a little bit about the ags and how some names within that sector are perking up. And we have a question here from Euro saying, what are your thoughts on Potash? It's been beaten down a bit, but acting well the last few days.
Yeah, this stock actually, I think a month ago, started acting a little bit better. You know, it's been out of play, off traders' radar for almost a year or two, whereas I would think a few years back it could do no wrong. So anyway, you know, you look at this chart, you look at this sector, and you know, people are looking for things to do. And this seems like something that, you know, it's starting to get some better flows. It's above the 50, it's above the 200, or regrouped these moving averages right there. Here is your gap that helped ignite this move from April. Okay, I think you got to look a little bit long term or longer term to really see what's been going on here. Let's get this together. You know, at this point, it's still a laggard. Okay, investors are probably a little upset with it. But what you did here is you have a little bit of, it broke this more like this intermediate trend. Now it's trying to hold it. I would say you want to be in a tier 1, you can be in a tier 1, but really it's got to take out this pivot to start a new, better trend that is more investable versus tradable. But all in all, you know, 2 days in a row where it's seen some decent gains. You know, if you got long yesterday, at least it gave you some follow through today, and you know, there is some room to get back up there. So, you know, it looks decent, B-type trade.
But perhaps one to keep on the radar as we head into summer?
Yes, exactly.
All right, how about Google? RL here saying, what are your thoughts on Google? Looks like it's trying to put in a higher low.
Now, this one's been a little lethargic. It's like the past few days, first it broke its upper level. So right there, you know, if you have high level stops, get out of the way. And then it tried to hold the 21-day, and then it did. It bounced off it feebly, and then it came back below it yesterday, and then today they were talking, went above it. You look at the chart here, and overall it's, you know, like remember that we talk about setups, and right here, this was, you know, I guess this was a nice descending channel that broke above, retested before it started another march higher above the 8-day. Then right here, we talked about if you wanted to stay with this, as long as it stays above this flag pattern, you can maybe get some momentum, but then momentum left right there. So if you used a stop, or maybe even got short, some people probably got short right around this, you know, 897-ish. You saved yourself some money, and then, you know, I remember saying, you know, we should see the 21-day, and then here you did. You saw the 21-day, then it gapped up with the market early this week, sold down, then gapped down, and now it's trying. You know, I would say if you want to be long versus this area, but to me, it's still a little bit lethargic. I guess you could say it's, you know, building another type pattern here where it's absorbing what took place right there. Okay, and but you know, short term, traded versus this, traded versus 864. If this breaks 864, you might see a little bit more corrective type action as the 50-day comes back up and it retests this 844. So at this point, look how long this descending channel took place. This could be one of those descending type channels through the summer month, and you know, I think that at some point, you know, perhaps it'll be buyable, but it might be buyable down here, and I guess this will tell us also like what goes on with the market, because if a stock like Google can't rally and high beta gets a little weaker, you know, or some of there's rotation there, you know, it might tell us that the upper wedge could resolve a little bit lower. So at this point, let's see how long this descending channel goes before we start to initiate a new position.
Okay. How about AMD? Shylock here says AMD has had a monster move on recent news. Is there a trade here anticipating some continuation?
Well, so a lot of different. I think we've heard about this stock a lot in the last month, and it was one of those, you know, trash for treasures trade where if you held on to AMD, you know, you definitely got crushed. But if you looked for some kind of volume breakout, you know, percentage-wise, you did really well. Like, look at this. This is unbelievable, the type of move that it had. You know, above this, what was this, 293. You know, had a big move, and now it's still holding in there. So I would say, you know, you have a wedge here, and we talk about what a wedge is. A wedge is a consolidation pattern, what consolidates a move from lower levels to figure out whether or not it needs to digest further, and it came too far and resolves lower, or it digests a big move and then continues up. So I would say if you're an AMD fan and you like it because of the fundamentals or whatever, that's your thesis, being small, but in order for you to get some traders and some momentum, it's going to have to start getting above 415, and I guess, you know, use this 21 days as a stop. So right now, to me, it's tight, and something should happen here soon. You know, it's either going to, I hate to be, you know, say it's going to go up or down, but that's what's going to happen here, and hopefully you'll see a direction and you'll go with it. You know, just real quickly, Intel, you know, Oh, what happened there? Oh, that's not Intel. Whoopsie. Awkward. No. Here's your Intel, where it also had a nice move. We talked about it at 22, and it's been going sideways. Hasn't been able to get traction here. So here's your channel there for Intel to figure out what could be next there.
Good. I'm glad you brought up Intel because we had one from Turbo Gumbo there asking for your
Turbo
thoughts.
Gumbo.
Turbo Gumbo. We got his question answered. Good. All right, so moving on. Here's one from Warm Trade Wins. He says, hey, Scott, you are the chart king. What's the best entry and exit long for LGF or HTZ?
LGF.
Lionsgate.
Yes, I think there was some news after the close today, so I got to check out what it's doing. This has had a big move. Look at this, the trend here. It's been strong. This was your last breakout. Here is when a lot of volatility hit, and it wound up breaking higher, and it's starting to break this upper level. So here is, probably some people might have got stopped out a little bit today, but it's still above the 8-day. It's still above the 21-day. It's just very extended. Let me see something here. Let me go to other intervals. No, I want to go to. I want to check out to see what's going on after hours in this thing before.
Well, it looks like they beat profit estimates on Hunger Games and Twilight home video sales. It must be all those Twilight home videos that you've been purchasing.
Yes.
Help to boost the stock.
What do you mean home videos?
Twilight. You know the Twilight franchise? Well, that's
Yeah.
what's helping to boost.
Okay, well,
Lionsgate.
what's the stock doing right now?
Let's see.
Let's see.
After hours looks like up 4.5%.
Okay, so then I would say if that's the case, 29.10 is your pivot. If it stays above 29.10, stay with it. If it can get above there, it might be priced in because this has been one heck of a run.
All right, let's check in on Hertz HTZ.
HTZ. Rental cars. Look at this trend.
He's also looking for a good long entry and exit.
Well, look at this trend. You have one trend that started from November, which the whole market started from. It's definitely not a trading vehicle that my guys look at that often because it's just, look at this choppy. But as an investment, it hasn't broken the 21-day, since November. So with that said, it's had a 3-day controlled pullback. I would maybe wait to the 21-day for an entry, and if it were to break the 21-day, then I would sell it and look to see if it tests the trend at the 50-day. You have a gap up here, which it's starting to fill. Okay, so that's taken out some of the momentum. You could say Hertz has momentum, but it still looks good. But I would say if you're patient, you could wait and buy the 21-day, and if it doesn't close above the 21-day, then for the first time it could hit the 50-day. That's pretty much all I have to say about Hertz.
Okay, how about MGM? Market Picker says, what are your thoughts on MGM? I'm stalking a swing long entry against 1450, around 1470-ish, flagging on the daily.
I like this. I like the fundamental story there. I like just the room rate story, the economy story, and last time I had a really big thesis on it was back here. So if you look at the chart, you'll see this is when it broke above this 13. I think I was long some stock, I was long some options, and gave you a move all the way up to here. Okay, and what was that? As high as 1595, and then if you look, just like the market, it's wedging. Okay, what does a wedge do? It consolidates a big move, which we saw, and this was a big move. So with that said, I actually got long a little MGM, not a lot, because I like the group and I follow it pretty closely. And I guess if it starts to get above, this 1570-ish, I don't know if it needs a catalyst. It could go again. You go to the weekly chart, and the weekly chart, it definitely looks better. Okay, you have the 200-day, which is at 1664, so you have some room there, or two there. I know that maybe on the monthly chart that this thing has been really, wedging for a while. This was a massive winner way back when, and it just looks like money's getting behind it. Kirk Kerkorian, he got approval to buy more shares. On the monthly of 18. I think that if you're looking for a swing and you want to throw this in the drawer, maybe within the next 6 to, I hate to say, 12 months, this could be anywhere between 18 and 22.
How about we talk some banks? We talked in this morning's morning call about the banks that have acted the best during the pullback, with Goldman being a standout and JP Morgan's been doing well. Gibbs has a question and Fuyi has a question. Gibbs has said that it looks like JP Morgan could be due for a possible red dog reversal, and Fuyi thinks that it's way too extended now.
Well, both of those kind of line up because usually a red dog reversal happens after an extended move to the upside or to the downside. And the reason why we have a red dog reversal is because you want to make sure if you're going to play a counter trend trade, you're not trying to, you do a pain short that could put you out of business, or catch a falling knife if you think it's got to bounce, because it never has to stop going up and it never has to stop going down. So with the red dog reversal, it could set up that way. So if you look at something like JP Morgan, you will see that it's very extended, okay? But sometimes being very extended means it's just, if you're not long it or you want to trim and trail it, it doesn't mean it's a short. But at this point, we had it off the charts right around 50. And now it is extended from the 8-day. It closed very strong. So if you want to trade it for a red dog reversal, maybe you write down 55.90, and it does look like it could make sense. But again, last week, when the market reversed, they couldn't even make this reversal bar red. It was green, and then it held the 8-day when most things came to the 21-day. So this still is very strong. So I would not be trying to short the strongest sector and one of the strongest stocks in the sector. Same way with Goldman. Look at this. Here's your descending channel. This is when it broke above 148, and this was at 150. And look at this too. This one actually went red, but also held the 8-day, didn't get to the 21-day, and now it's already at a higher high with Citigroup. So at this point, it might not be the right time to initiate one of these, but if you long it, you trim and trail it. But sometimes, when it's extended, it doesn't mean it's a short. But if you do see a red dog reversal, perhaps try and get a cute trade, but make sure you do it with a plan, because the last thing you want to do is be strong, short the strongest sector, and sometimes trying to be cute could make you a little ugly.
Well, Gibbs actually thought, being as you pulled up Citigroup, he thought that it looks like it's due for a possible red dog reversal as well.
Yeah, look at this. This was one of those that made new highs first, and it's definitely been more money from the long side than the short side. It's at higher highs when the market's not. Here was your red dog reversal, gave you a day-and-a-half trade, not much room to make money there, and then regrouped and went. Here is today's high, so if it pushes through 53, 56 and makes just say a high at whatever it is, and then comes off and puts another tail in, then play that game. But that game is definitely a tricky game, and it could be very frustrating if that game doesn't set the table the right way.
Labor Boy here says, does Zillow have a head and shoulders pattern in place? And what does the chart tell you about where this housing play might go?
Okay, well, let's take a look here. Zillow. It seems like it's, first time you're looking at it in a while, just from the first glance, it does look like it's building somewhat of a head and shoulders pattern, with this being the left shoulder, this being the head, this being the right shoulder. But again, these type of patterns don't trigger unless the neckline gets broken and you close below it. You want to talk relative strength or weakness, like right now it's into the moving averages, it's starting to curl over. You did have a wide range bar right here, which it hasn't been able to reclaim. So I would say the sellers are still in control. And if you want this to be a real good short, it's got to trade below 53-ish, okay, or not 50. What's this? Yeah, like almost 54, and close below it. And then the measured move would be from here to perhaps the 200-day. But just remember, the housing stocks are the strongest sector, and this is kind of a high beta name in it. But all in all, this type of thing could build a little bit longer. But I would say, it's in the bears' court to keep the pressure on, and the bulls had their somewhat of an easier run. Let's just take a quick look at the home building group, because this group itself also, to me, is getting a little weaker. The financials have been stronger. You've had some nice housing data, and it's below the 8 and 21 days. So I would say, just because it is, I guess, part of the group, if this were to start breaking below 31.71 to come in and test a 50-day like it's done a few times this year, perhaps, at the same time you'll see, your Zillow make a move to the downside. So make sure you have them both up, even though they're not exactly the same scenario, but the groups sometimes move together,
right,
or psychologically could have impact on each other.
Right. Yeah, important just to watch them both. Labor Boy here says, how do you handle a stock like Ford that you like on a macro basis, but goes up strongly for several days in a row, making it hard to buy?
Just avoid, and you got to just wait and be patient, because if you revenge it and you chase it, all of a sudden you get the pullback, and then you don't hold it through the pullback. And if you look at Ford, another stock that, I don't want to toot our horn, but we definitely talked about this many times. I know Charcoal listed it a few times. I'm not exactly sure where, but here was a nice trade right around 1373, continued higher, came back into the 8-day, held the 21-day. Now it's 1, 2, 3, 4 days up. It's extended from the 8-day and extended from the 21-day. For some reason, it always finds its way back. So if you missed it, wait. This has been some move from 12 to here. Some people were talking about shorting it today, and I guess it didn't really give you that clue. I guess if you're looking for an 80-20 trade, 1602. It's hard. A lot of these things are the same type of scenario where they've just had tremendous moves. You're waiting for a pullback that doesn't really happen. Then you try and say, okay, let me try and short it, and that doesn't work. So you lose money shorting a long you wanted to own, but you're revenging it short because you feel like you have to do something. So sometimes doing nothing is better than forcing a trade that doesn't exist.
All right, well, that is all the time we have for questions today. What do you think heading into the last trading session of the week?
What do I think? I think that it's the month of May is what? It's almost over.
Right.
Okay, and this will be the 7th month of upside gains, and the 7th month of the stock market following the 21-day, testing the 50-day once, and we're at a pretty much inflection point where the jury's out on which way it's going to resolve. If it's the same trend that we've had, it goes sideways a little bit more and goes to the upside. And if that's not the case, then perhaps we can map out those other levels. But I will say, as a trader, I'd like to see a little bit more of a pullback, just because I know that the performance anxiety of everyone, like new highs, all-time highs. It feels like everyone should be making all this money, but the action hasn't been so great. As high as these prices are, the volume's low. There's definitely some dislocations, and it's hard to buy things 4 days up, but it's also hard to short it. I think last week some traders got a little better action or relieve some stress when you had that outside day, and we were able to buy down opens to go positive Thursday, Friday, shorten up open on Tuesday, and play ends of the ranges and be tactical, because for most of 2013 it's been either portfolio approach or nothing. And because of the moves, I know I found myself trimming, trailing myself out of a lot of good longs that continued to go up, that even though you made money on it, you're like, wow, why didn't I keep that longer? Something's wrong with me, but there's nothing wrong with me, I don't think. Maybe a little bit, but I'm just saying there's nothing wrong with you either. If you're a little risk averse and you took profits and it went a lot higher, next time maybe trail it a little bit better, or just be happy that at least you weren't cost averaging shorted. So anyway, with that said, I would say the last day of the month, the last thing you want to do, is force anything into a weekend. If you're not happy with May, June's here. We're still not even at the half-year mark. That there's a lot of year left. Okay, so I think I've said this a lot of different times in the last few months, where don't revenge into a situation where you make it harder for yourself to come out of. When again, this is month 5, we're not even at the half-year mark, and there's composure could change, trading could get easier or more conducive to whatever style it is that is your own, and just keep making progress. And the best thing you can do is just really be honest with yourself and realize why you're not performing. Whether your size is too big, your time frame is too small, or you think your time frame is bigger and it's not, or you're being opinionated, or you're trying to stay with one thing that's not moving and you're not looking somewhere else. So a lot of different things that go into it. So if I were you, I would put together a journal so you could create that inner voice, so you could start reading back on things that you tell yourself you're doing wrong, or things you do right that you could expand upon.
Or tweet Red Dog T3 Live and he'll commiserate with you, right?
Yeah, it's sometimes. Sometimes, I just to let you know, I had a little, I was starstruck today. I'll tell you what happened.
Okay.
I spoke to Stephen the Knight from Spartacus today.
Wow.
Yeah,
Don't you love Spartacus,
I love
right?
Spartacus.
Yeah.
I got pictures on my phone. So anyway, just to show you how Twitter is very cool. I try and respond to everyone that tweets me. Just if you're taking the time to tweet me, I'm going to take the time to tweet back. And obviously, these celebrities out there that have a few 100,000 Twitter followers, they don't always do it. So I've kind of been stalking Spartacus and the producer who wrote the whole show. And every now and then, I'll send them a little tweet. So last night, my dad just came in from Florida. He comes in once a month. So he didn't see the finale. So we sat down, we saw the finale together. We actually stayed up and didn't pass out on the couch. And so I tweeted it to him in the morning. I'm like, the finale was just as good the third time as it was the first time, as my dad needed to play catch up. So then he retweeted saying, Spartacus bringing families together. We spoke, and I actually invited him for an interview here, and he said next time he's in New York City, he'll try and make it happen. So see, you can make it happen.
There
you just
go.
gotta be, what's the word? A go-getter?
Put yourself out there.
Yes.
So now Red Dog will be waiting for all of your tweets tonight.
Yes, and I'll answer a few of them.
All right, meet us right back here next week for another StockTwits Q&A. Have a great night.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.